Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is the third day of November 2024 and I think the previous week or the last week was a little bit negative, just slightly negative. Trying to think if any commodities were up big in the past week. I can't think of one. Most indices down a little bit, most commodities down, maybe bonds were up. So the agenda of today's video is I'll do what I always do in these videos, go through charts, indices, commodity, crypto, bonds, even currency. And then when I get to the individual stock portion of the video, I'm going to do something a little bit different because typically I'll just show you charts I'm interested in. And usually these charts are of companies I don't own that I might own in the future. But what I've decided to do, because I haven't gone through all my watch list just yet, is I'll show you 4 charts that I do find intriguing right now. Plus, I'm going to show you 10 stocks I am trading right now. We'll have a look at the charts, dissect what I am seeing, and I've included these 10 companies for various reasons. And I am thinking maybe I'll do this every single week. I'll show you between 5 and 10 charts of companies that I am trading at the current time. And I think that will be, because I'm trading quite a few, so I will change which companies I include in the video. Anyway, so I've been thinking about doing that. Just a bit of a change when it comes to the individual stock portion of the video. Okay, so let's get stuck into looking at some indices. Starting with the XJO, and this is the XJO daily chart. And I've just noticed, you can see there was a bit of negativity in the market towards the end of last year, particularly October into start of November. And the bottom in the market then was just towards the end of October. So that means in the past year, in fact, that low was around about 6,700, 6,800. So in the past year, the XJO has gone from about 6,800 to 8,100. That's a pretty good return in a 1 year period. Not only that, I can confidently say that the XJO has been in an uptrend since the start of 2024. In fact, I think it did move into an uptrend back in December. So for almost 1 year, the XJO has been in an uptrend and nothing to complain about right now when it comes to the XJO. Couple of negative weeks. Last week it was down 0.87%. This week it was down 1.2%. Let's verify that. XJO was down in the past week 1.13%. That is okay, having a couple of down weeks. We're going to see this happen quite often, even in long-term uptrends. And in fact, the XJO has been in a 15-year long-term uptrend. Yes, I don't consider the COVID-19 financial panic to have broken that uptrend. It looked like it might have for a period, but I do think the XJO has been in a long-term uptrend for 15 years. Now, we are still near the top of the trading range. And typically when the XJO is near the top of the trading range, we are more likely to see weakness. And I think that's the most important thing when it comes to what I just said. Be more likely to see a bit of weakness. Not we will see a bit of weakness, more likely to see a bit of weakness, because that's what we've seen in the past. And history often repeats. It often rhymes, but it doesn't repeat, but it often does rhyme. Anyway, if we go back to the daily chart, a couple of negative weeks, but still in an uptrend, still in a short-term uptrend, long-term up. Well, I suppose how it all depends on how you define short-term. But for me, still a short-term uptrend. In fact, I do think we have seen a little bit of support come in the last or towards the end of the week, particularly in the Friday session. And the reason I say that is if you just look at these 2 shaded areas, which are 2 moving average channels, whenever the XJO sort of gets in between the 2, that's when we do see some support. There was a fair bit of weakness back at the start of August, if I remember that. That was a carry-on yen trade, or whatever you call it. And the XJO actually fell to the bottom of the longer-term moving average channel, and that's where we did see some support. So right now, it is in a support area. It doesn't necessarily mean we will see the XJO go higher from here. And on top of that, it actually bounced off a support price. That's that dashed line. So I actually did bounce off that. Briefly went below it, and it's bounced off it. And in fact, the XJO closed above that support level. So that's actually a good indication a bullish indication that maybe we'll start the week positively. And it doesn't hurt that the Nasdaq was up 0.7%, Dow Jones also up 0.7%. So I do think we'll see a little bit of green in the Australian market on Monday. Anyway, so still positive about the XGO, even though we've had 2 down weeks. I do know there are a few comments on my page, particularly just James Dean, who thinks there is a bit of weakness, but everyone is going to have a different opinion. There are some people who are perma bears, some people who are perma bulls, and everyone else is in between. I am more bullish than bearish just because overall the market does rise over time. But I do think there are points, periods, where it's actually prudent to be a little bit more bearish. And that's particularly true when the markets are overvalued. And there's definitely an argument that right now the markets are overvalued. All you have to do is have a look, PE ratio, ASX. I think Market Index has a site here. Yeah, PE ratios. No, that's PE ratio, ASX companies with lowest PE. According to Market Index, the PE ratio for the ASX is 27.68. That's interesting. Here we go. Market statistics. I'm pretty sure I've looked at this page before. And the dividend yield is below average. PE ratio is higher than average. In fact, over the past 40 years, this goes back to 1980, it has only been higher than right now once, and that was back in 2021. And I think it's about 26 according to this. Now, this is the all odds, not the whole market, just the all odds. So definitely there is an argument that we are overvalued right now. And I think a lot of that overvaluation comes because is here because of the banks, mostly. And the 4 big banks, apart from maybe ANZ, are definitely overvalued, and they are a large portion of the ASX. So he's looking at you, banks, and I think there's definitely signs that a possibility that we might see significant weakness in the banks. They could fall a fair bit, and that will drive our markets down. And there's other companies also that I think are overvalued. I still think Woolworths is overvalued. Anyway, so still not bearish when it comes to the XGO just because the chart. That could change in the next few weeks if I see a lot of weakness, if I see it fall below this support level, if I see it moving into a short and even medium-term downtrend, I will take risk off the table. Okay, XSO. I actually am a little bit more bullish about the XSO and have been for a little bit. It did break out above a resistance area or zone a few weeks ago, maybe even a month ago. And just like the XGO, we have seen the XSO pull back. I'm just wondering if it's pulled back as much as the XGO. So we'll say the XGO has pulled back about 2%, and the XSO down 0.5% last week and 1.1% this week. So not down as much as the XGO, but just like that particular indice, we have seen a little bit of weakness, short-term, very short-term weakness in the XSO, but still it remains above that broken resistance level, which means now it's support level. And again, just like the XGO, we did see a bit of a bounce on Friday. Okay, so that's the Australian market. Now let's turn our attention to the Americans. And a good end to the week. All 3 indices I'm going to show you are up by similar margins. Nasdaq 0.7, Dow Jones 0.7, and Russell 2000 0.6. Now, if I remember correctly, all were down for the week. Now, there was a big down day for the Nasdaq. I think they all had a big down day on Thursday. So Nasdaq was down 2.44%, mainly driven by what I've read because of Microsoft. Was it Microsoft and Meta? I'm trying to remember. I'm pretty sure it was Meta and I think it was Microsoft, even though Alphabet released pretty good results and Amazon released pretty good results. So 2 positive reactions, 2 negative reactions. Anyway, that's why Nasdaq had a weekday on Thursday, up again on a Friday. And just by looking at this fairly closely, it is down for the week because of Thursday's session. And how much was it down? 1.57%. But if you do have a look at where it started from at the start of the week, it's at all-time highs or near all-time highs. Now, it is struggling to get above that all-time high level. All you have to do is just draw a line right there. In fact, if you just zoom in, you can see it is struggling to get to that all-time high. It's been straddling at that level for not only the last few weeks, but also back in July. It failed to move any higher, then pulled back, and now it's retraced back up to that level, and it's struggling. So this is telling me that there is a bit of an increased selling, and maybe there's increased selling because it's at this level. So people are taking their profits, taking risk off, that sort of thing. And if we do see breakouts above this level, then some of those who have left the market might re-enter. That's how it works. Okay, so that's a net. NASDAQ still, if you look at the daily chart, still nothing to worry about, or systems go. Now the Dow Jones, I have been more bullish when it comes to the Dow Jones. Now we have seen a pretty good pullback over the past 2 weeks. It's gone from above 43,000 back down to well below 42,000 or just on 42,000. But this is normal. This is nothing to be concerned about because just like every single other indice, just like every single company that's ever existed, whenever something is in an uptrend, on occasion you will see a little pullback. And we've seen this with Dow Jones since it moved into the uptrend back in November, December last year. Pullback, 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 pullback. This is the 5th pullback we have seen. And it seems like the 3 previous pullbacks, the Dow Jones moved into the top bit of the longer term moving average channel. We can see it happening 3 times and then moved higher. So it's actually well short of that. Still has a long way to go to fall before it moves into that zone. And the last time we did see a bit of a pullback, it got nowhere near that. Well, maybe not nowhere near. It got close, but not quite. So Dow Jones industrial average looks pretty good. And I think this is just a normal little pullback that we're going to see consistently when if it keeps on running higher. Now onto the Russell 2000, small caps. How is this looking? There is a pretty good or nice resistance zone for the Russell 2000. That's that purple box. It's struggling to get above that. Really, really struggling. We've seen it get into the box 1, 2, 3, 4, 5 times. It was about 2 or 3 weeks ago. It looked like it was breaking out middle of October, but it failed and it's pulled back. And right now, the Russell 2000 is just below the purple box. But if you do have a look at this chart and just ignore that purple box, it's in an uptrend. It's been an uptrend since the start of 2024. Fairly similar to the XGO, fairly similar to the Dow Jones. I just want to see the Russell 2000 get above this purple box. And to be honest with you, there are no companies I own that are in the Russell 2000, I think. I should have a look at that. I don't think there are. Anyway, now let's have a look at some international indices. And by the way, I didn't have a look at the weekly chart for either. Did I have a look at the weekly chart for NASDAQ? I think I did, yeah. Dow Jones down a little bit, 0.15. I think the Russell 2000 was down about 0.1%. Yes, I was actually up. Russell 2000 was actually up. Okay, I didn't know that. That's interesting. It was actually up. Oh, yeah, because last Friday it closed at 2,207, and on Friday it closed at 2,210. So that's interesting. Very interesting. Up slightly. That might be the only indice up, the Russell 2000. Now let's have a look at the international indices. And what I'm going to do is just have a look at the weekly chart. Why not? So Nikkei, flat. In fact, if I saw this one-day candlestick, or 1 week, or 1 period candlestick, I'd be a little bit more bearish. So it's sort of, think of that, what they call it, a hanging man. I think it could be hanging man candlestick. Or maybe it's a gravestone. No, it's the opposite of a hanging man. What's the opposite of a hanging man? Opposite of a hanging man. Maybe it's a gravestone. Well, according to this, a gravestone happens at the top of a trend. Or the top of it sort of signifies the end of the uptrend. It's sort of a topish. There is some sort of word for this little candlestick. You can see there's the main body, and then above the main body, there's a really long shadow, which tells us there's a bit of selling coming in during the week. So the market opened near the low and also closed near the low of the week. So that tells me a little bit of selling. And you can see a bit of an opposite. Back, if you go back to start of August, that 1 week candlestick there was a lot of buying coming in because there's a long shadow below the main body. So we see the opposite here. So that's just telling me there's a little bit of weakness. Doesn't really mean absolutely that we will see the Nikkei down over the next few weeks, but there has been a little bit of selling during the week. So that's my only bit of insight when it comes to Nikkei. Overall, if you do focus on the weekly chart, it's still in an uptrend. In fact, it's been an uptrend for a while. It's been an uptrend since 2013. There you go. And there's been times where it looks a little bit weak, but it's been an uptrend for 11 years, and that's sort of typical for indices, to be honest with you. Hang Seng, not quite the same for the Hang Seng. In fact, I would have said the Hang Seng was in a downtrend since 2021, and possibly, just possibly, we are seeing the end of that downtrend. Now, I do like the chart for the Hang Seng because we had that really big run up, really quick run up because of stimulus, and then we saw a down week, and then each subsequent week has been less worse than the previous week. So what I mean by that is the 7th of October down 6.5%, then the next week it was down 2.1%, then the next week down 1%, and last week down 0.4%. So each successive week is not as bad as the previous week, which tells me we are at a support level. And you can see that with the weekly chart, but you can definitely see that by looking at the daily chart. So rapidly down in one day by 9%, and it's starting to go sideways. Found a bit of support. It's touched the shorter term moving average channel. And if I saw this with an individual company, I would be actually interested in taking a position because nice breakout, it's a pullback, and I wouldn't be surprised to see the Hang Seng go higher from here, just based off the chart. Okay, back to the weekly chart. Let's have a look at the DAX and FTSE. DAX, I've always liked the DAX. DAX has been looking pretty good. It's just come off all-time highs, and just like some other indices, just because they had a bit of a pullback the last 2 weeks, nothing to be concerned about. But the FTSE is a different story. In fact, FTSE had a negative week, probably one of the biggest negative weeks out of all the indices that we've looked at. Down almost 1%. It's been going sideways for about 6-7 months. Yeah, we'll say 6 months. FTSE has been going sideways for 6 months. You can definitely see that with the daily chart, just going sideways. So I'd say this is losing its uptrend. We need to see it go higher. In fact, because of the negative week, pretty good day on Friday, however, up 0.8%. And it might be at support level, but if we do see further weakness, that will be fairly negative for the FTSE. Okay, so that's the indices. Now let's have a look at commodities. And we'll start off with gold, silver. What I'll do is I'll have a look at gold, silver, copper, because they're sort of the same, in the same sort of area of commodities, and then we'll go from there. Okay, gold. They're all down, looks like, in the past day. Oh, copper's up. Okay, I would like to know if anyone has anything negative to say about this chart. I'd love to hear about it. Now, maybe the only thing you could say, it had been overbought early in the week, and it was ripe for a little bit of pullback. And we have seen a bit of a pullback the last few trading days. That's the only possible negative thing you might be able to say. For instance, if I just put in RSI, I want to see if it was getting towards overbought. Yeah, it was getting towards overbought. Yeah. In fact, it was overbought on Wednesday. There you go. But we have seen it overbought quite often during this uptrend. In fact, it was significantly overbought in March of this year at the start of the uptrend. So it's one of the reasons I don't necessarily use RSI or overbought, oversold, because something could look overbought or oversold and just keeps on moving. And this is a good chart. Nice chart, nice little pullback, nothing to be concerned about. I see nothing to be worried about when it comes to gold. And in fact, if someone said to me, I have a lot of gold stocks in my portfolio right now, I would say, I can't blame you one iota. So I now have three. I have three. I was been thinking of increasing my gold to 4 stocks. Or maybe I do have 4. Can't remember. 3 or 4 anyway. Silver, on the other hand, there was a more negative day for silver. And I did take a trading position in Andean silver because of the pullback in silver and the pullback in Andean silver chart, and I thought, oh, this is looking interesting. So on Thursday, silver down at 3.75%. It broke out, silver broke out on the 18th of October. So about 2 weeks ago, and it's had a pullback. This is what I like, a nice little pullback. But if we see silver fall further from here, that actually would be negative. So I don't want to see fall much further, particularly in over a week period. So if I see it fall below that support zone, like in 1 day or even 2 days, nothing necessarily to be worried about, but I want to see silver to rally subsequent to that. But at this point in time, nice pullback, not bearish about silver at all, still bullish. And if gold keeps going up, it's going to lift up silver with it. In fact, if you compare silver to gold right now, silver is pretty good value. And copper. Still maintain one copper company in my portfolio. And I have been thinking about selling that if I see it go on the run, but I'm not that concerned when I look at this particular chart. Not that bullish either. And so we have seen copper just go sideways for about really 2 weeks, 3 weeks maybe. Yeah, since the middle of October, copper's just gone sideways. So very little volatility in copper over a 3-week period. And it's just been above a support level. And that's interesting in itself, that it's just remained above that support level for 3 weeks. I would not be surprised to see this go either way. So I would not be surprised to see copper go on a really good rally from here. And on the flip side, I would not be surprised to see copper fall. And I think how the markets are feeling about the economies will determine which way copper goes. So if we're feeling a little bit more bearish about the economies, then copper might drop. If we're feeling really good, then copper might rise. And if anything, I'm feeling a little bit better than not. Okay, let's go have a look at iron ore. Or I could look at something else, but we'll have a look at iron ore. If anything, when I look at iron ore's daily chart, I say downtrend. Yes, I still think it's in a downtrend. Not a strong downtrend, but definitely in a bit of a downtrend. I want to see if I can put a downtrend line here. I don't think it really matches up all that well. Yeah, it's not a very good downtrend line. Yeah, I'm not going to put any downtrend line there. Anyway, so there was a nice little rally because of the Chinese stimulus, and that rally's really faded out. And if anything, it is starting to slip lower. So not excited about iron ore at this point in time. Do I own any iron ore companies? No, I do not. Uranium, on the other hand, so if anything, I'm a little bit bearish when it comes to iron ore. When it comes to uranium, I'm a little bit concerned about uranium. Well, not that concerned, but we have seen 2 down weeks in a row for uranium. This is spot physical uranium. The only reason I'd look at this is because the candlesticks are much better than the normal uranium, but 2 down weeks in a row. So last week, uranium down 4.47%, down another 5.29%. So I was looking or feeling a little bit more bullish when it comes to uranium, and that bullishness has sort of seeped out of my system, and now I'm possibly turning even a little bit more, well, definitely turning bearish, but not completely bearish, because I could definitely have, there's definitely an argument that uranium's not in a downtrend, but this could be just a bit of a cycle you might see, a wave-like pattern you might see in something going sideways. So up and down in waves. And maybe we're just in a down period for uranium, and then soon we're going to see uranium go on a little bit of a spurt and then pull back, a little bit of a spurt, pull back, but generally just going sideways. So I can definitely see that. But at this point in time, I don't see any trend in uranium. So nothing to get overly excited. Oil, I think, if anything, oil, I'm bearish, even though I bought some Karoon. Still don't know why. Actually, I do know why, because I forgot. I put into position for Karoon, and then like 2 weeks later, it got hit. I went, what? I got a little alert. Oh, you bought some Karoon. I went, oh, I forgot about that. Anyway, lesson learned. You put an order in, don't forget about it. Anyway, so when I look at oil, what's there to say? Nothing much to say. It's not an uptrend. If anything, it's in a downtrend. There is a bit of support around $66. We'll say $65, $66. It's at $69 right now. Who knows? I just don't know. There's nothing to draw from this anyway. So I'm neutral when it comes to oil, if not slightly negative. Natural gas, probably the same. Neutral to maybe slightly positive, if anything. Lithium. According to this lithium, this is not lithium carbonate. I'm not sure what this one is. I can't find any good lithium chart anywhere. There's a chart on trading economics, I believe. Lithium charts. I probably should say, trading economics. Is lithium carbonate, I think? No. I'm pretty sure there's a lithium carbonate somewhere. And it might be actually in this one. But I just can't find any good chart anyway. Anyway, if you look at this, lithium not doing anything. And in fact, according to this particular chart in TradingView, lithium fell about 6%. But there's no uptrend. So I'm not sure why anyone's getting excited about lithium just yet. It's not trending up. Now, maybe we've seen the bottom, but I've been saying that for about 10 months. Or maybe we've seen a bottom of lithium and then it continues to fall very gradually. But I don't think it's going to fall much further from here. So maybe now is the time, particularly if you're very bullish about lithium over the next 10 years, maybe now is the time to think about gradually buying into some lithium companies. It's up to you. Coal's an interesting one. So this is one where I definitely think the downtrend has come to an end. And if anything, we're starting to move into an uptrend. Yeah, I like this chart. It's not it's an amazing chart, but I can definitely, particularly if it gets above 152, that would be a breakout. What about tin? I did notice not market index, MLX, that's why I was thinking market index because of the T code, Metals X. I actually had a quick look at this chart and I thought this chart looks interesting. It's at a resistance zone right now, however. And the reason I'm talking about Metals X is because it's tin. So I saw this chart and went, oh, tin must have had a pretty good period. So now we have a look at tin here. And it's just going nowhere. It's just going sideways. Nickel, down. It's at a low point. You probably can't see it, but if I put a line, it's at a low point. No interest in nickel for me just now. And Palladium. Well, Palladium had a pretty good week last week. 3 down days in a row. This is not a reason to panic. And the reason I say that is it looks like it could be just a pullback to a support level. Now, if we see continual weakness in Palladium over the next few days, that will be negative. If it falls below that support level, that would be negative. But this is not a reason to be panicked. In fact, if I wanted to buy some Palladium shares, which I might, now's the time to be thinking about that. That's what I'm thinking at this point in time. Let's move on from cocoa and let's turn our attention to crypto. So Bitcoin did get above 70,000 during the week. I just noticed it's no longer above 70,000. It's dropped below it. And this is a case where I do think there is a bit of technical analysis going on here. Some resistance level trading. So Bitcoin did get up to a very important level. That was on Tuesday. Bitcoin got up to 73,600. Now, the reason that's important is if you go back to March of this year, Bitcoin got up to 73,600. So what happened this week? Got up to 73,600, and what happened? We started to see a bit of selling. So there would be people out there who knew that 73,600 was an important level. It was odd highs Bitcoin saw in March, and we did see increasing selling pressure. And then 4 straight days in a row, Bitcoin fell below 70,000. Now, again, this could be just a little bit of dip in a new uptrend that is developing. That's what I see here, a possible uptrend developing. And what would be what would be quite bullish for Bitcoin is if it can break above 73,600 on strength. And that will force out anyone who's thinking of selling their Bitcoin because of where it is, the price where it is. Anyway, so still a little bit more bullish when it comes to Bitcoin than I was for a period here. Maybe less so for Ethereum. It's showing no signs of any trend here. So unlike Bitcoin, which is showing signs of a bit of an uptrend developing, this is just showing signs of going sideways. So nothing to get excited when it comes to Ethereum. Now on to bonds. And I've just noticed US 30 bonds up 2.35% on Friday. So if anything, this is probably one of the more bullish looking charts apart from gold and silver. No, maybe not. But this is a surprise. It's getting up now to 4.6%. It fell to 3.9% in September. Now it's up to 4.6%. This is interesting. I have seen a lot of chatter about this. Why is bond yields rising? It should be doing the opposite. Anyway, I've heard a lot of discussion of why it's happening, and I won't discuss that right now, but because I'm just talking about the charts here. This is actually a really interesting chart. I probably wouldn't trade it because it has been quite volatile. You can see a fairly big drop, and then it's sort of like a V-shaped recovery. Don't really like those sort of trades. And last time bonds were at this level was not that long ago. We're talking about July. So we're talking about 4 months ago. It's not that long ago. I prefer at least 6 months before I get interested. And the run-up has been quite quick. And I prefer more of a gradual rise. Anyway, so interesting happenings with the 30-year bonds, or just bonds in general, which means the TLT ETF is a complete opposite. It's looking weak. In fact, if I had to play anything, I'd play this. I'd probably buy some TLT when I'm confident yields are going to drop. I think that's the right play here, but at this point, not interested at all. And finally, US currency, or Australian currency. Australian dollar, US dollar. And yes, I was quite bullish, waiting for a breakout. That breakout never happened, and we've seen a pretty good pullback since then. So nothing much else to say about the US dollar right here. Okay, let's get to the individual company portion of the video. So I'm going to show you 10 companies I am trading right now, and 4 companies that I think look interesting for various reasons. Now, actually 2 of these companies I actually had in last week's video. So I thought, why not do an update? How have these companies gone? So APA Group is the first one. So 1 week ago, it was right at a sort of resistance area, fell through it. And in the past week, it's not been a good week for APA Group. In fact, the last 3 trading days, down, down, down. In fact, for the week, APA Group down 5.3%, which is a fair bit for a company like this, an infrastructure company. So I have a look at this chart, and the first word is bearish. In fact, the volume on all 3 of those days was quite negative. So maybe a fund manager is getting out, or maybe quite a few fund managers is getting out of this company. So this chart looks pretty weak, but eventually I do think there will be value investors who see some value and say, hey, now's a good time to buy some shares in this company. Going down the same path, we have Endeavour Group. So this is another one that broke through support, and I just wanted to see what happened. Has the fall in Endeavour share price kept on going? It has. We haven't seen any bounce. A bit of a doji in the last trading day, but fairly similar than APA, but not as bearish. But still, Endeavour Group share price moving in the wrong direction. And then on the flip side, Platinum Asset Management. I do like this one. Share price, if it gets above $1.24, nice little move there. So I definitely couldn't imagine myself taking position or trading position in this company, which makes me not ill, but wow. Just thinking about, I would not consider this company a long-term hold. Definitely not a quality company, but just looking at this chart, I like how this is playing out. And on top of that, they did release a really good monthly update, I think, or maybe it was a quarterly update. And that's why, one of the reasons why the share price and the sentiment in this company started to change. And maybe this sentiment and the change in the company could be long lasting. So this is an interesting one. Definitely one I've been thinking about over the past few weeks. Another one I saw the other day was Develop Global. This looks like it's trying to move into an uptrend. If it can get a little bit higher from here, that would be a bullish move. So this is another one, one of a few charts that I just had a look at and went, oh, I'm going to include this on one of my watch lists, and all the companies on this particular watch list. I look at the charts, not every single day, but numerous times through a week, just see how the market is responding. So if I see this uptrend continuing, this could be a nice little play. This is also, some people refer to this company as like the mini mineral resources. They have a mining services company, but they also have mining projects. I'm not sure if they're in production, but they are either profitable or they are cash flow positive. They did release an Appendix 5B. Have a look at that. Okay, now let's get to companies I am trading. And what do I see for these 10 companies? Now, in the future, I might limit this to 5, but I think this is very useful. This is all these charts I look at every single day. At the end of trading, I look at these charts just to see if I have to do anything. And when it comes to Life 360, don't have to do anything. So what I'm looking at is the share price in relation to this blue line. And then I ask myself, should I increase the blue line? Never decrease the blue line. It's only increasing the blue line. And at this point in time, I did increase the blue line during the week. So it was down a little bit lower, and then I've increased it almost to $20. So this is a case where I took a position in Life 360 when it broke out, not broke out, it was actually sort of was a breakout. They released a really good report on the 1st of March. Share price on that day rose 39%. And there will be some people who tell you, some experts will tell you, well, you missed the boat. You have to be in it before a day like this. You've just missed it. There's no point. You've missed it. All the new information has been priced in. So have a look at this chart and tell me if that was right. You could have bought. I bought on that day at $11.39. The share price has almost doubled. This is in 9 months of trading. So don't ever be hesitant about buying in when you see share price rise 39% in one day. And don't listen to people who tell you, particularly experts who tell you, you're too late. You have to be in before. This is just, it's just too late. Now, I've heard that a lot from experts saying, no, you have to buy in before. So this is a case where, no, you didn't have to be in. And I have cases like this over and over again. And then I added to my position in August. So I added more at $17.70. And look at the share price. It's even higher from there. So this is definitely a case where I'm just trading this, and this could keep on going up from here. A lot of interest in this company, not only in Australia, but overseas. And I have told the story. I was listening to a crime podcast, or maybe it was a video. I do like crime. I don't know why. I think a lot of people like crime. I just like the mindset of criminals. I don't understand it. And I am intrigued by what I don't understand. Anyway, in this particular episode, whatever it was, they actually mentioned Life 360. The family was on a Life 360 plan. They could track each other around. And I was like, stalking. Anyway, so a lot of people don't think it's stalking, but I don't want myself to be... Where's my video going? My head's gone out of the picture. Anyway, so that was a really interesting moment. That's when I went, hey, this company and their product, their platform is quite popular. All right, so that's Life 360. Now onto Catapult. All right, so this is another case. This actually is a little bit different. This is a case of a company I've been trading in the past. So I bought some shares in 2023 at about 70 to 80 cents. And then I sold at $1.20. Share price going sideways. You can see share price went sideways from November 27 all the way through to March. Wasn't that long, 3 or 4 months. I actually did become bored. I went, no, I'm just going to take profits at $1.20. Well, I think it was $1.25. And then there was a really good day on, I still remember this, there was a really good day on the 26th of March. Share price on that day rose 21%. I went, oh, damn it. And I had plenty of time to buy back in. And then eventually I bought back in a few months later, the 31st of May, $1.79. There was another breakout. I went, look, I'm just going to take a position in this company, trading position. And I've kept on increasing my stop loss. And now it's at $2.25. And this is a really nice chart. But I am aware this company has had a reputation in the past of having really good looking charts, and then the share price just falls back. So that's why I've got a nice little stop loss, but at least I'm going to be profitable in this trade. What I mean by that, look at this chart. This is the weekly chart of Catapult. Share price is still well below its all-time highs back in August 2016. So definitely one to trade. However, I think this is a little bit different, most dangerous words ever, because I think this company is heading towards profitability. And also, this is another company I have heard on podcasts. Sporting podcasts in the United States have mentioned Catapult. Yeah, so I've noticed one of the athletes using the Catapult system or something like that. I went, name dropping, although they didn't mean it. They have no reason to name drop Catapult. They wouldn't even know they're an Australian company, wouldn't even know it's listed. They just say these athletes are using Catapult's products. Now, so this is a nice looking chart. And on Friday, it went to a long-term high, up 4.2%. The other thing too, I've neglected to talk about volume, but look at the volume. So if you go back to 2000, towards the end of 2023, very low volume for some reason over a 4-month period. And then we definitely have seen a bit of an increase in volume, particularly in the second half of this year. Civmec. So this is an interesting one. And speaking of volume, wow. Okay, so there was a breakout in Civmec on 19th of July. And someone mentioned that the reason why the share price rose is because this got a favorable talking about on Ausbiz the Core, the 2 buys or something. So I have heard that. The share price did go on a nice little rally, but then it pulled back. And I went, ooh, this is a nice little pullback. So I decided to buy some shares at $1.10. And then on the day I bought, the share price kept on falling. In fact, it went almost to $1. I was like, oh, geez, what's happening here? And then share price didn't do anything for about 2 or 3 weeks, did nothing. And then on the 30th of August, we had a good day, up 5%, and the share price has kept on increasing since then. There was a down day on the 18th of October, that's okay, but share price has kept on increasing, and nice looking chart, but look at the volume. So when we saw the share price pop up back in July, look at the volume there, increase, then a bit of a decrease in volume as the share price fell. Exactly what you want to see. You want to see increasing volume as the share price rise. And when the share price pulls back, you want to see decreasing volume. And the reason you want to see that is because you want to see more enthusiasm by the buyers. So the buyers are really enthusiastic here in July. They're buying and buying and buying. And that's why that's what forces the share price up. The enthusiasm of the buyers. But the sellers, there was no enthusiasm. Very little selling happening. And then look what happened during the last 2 weeks. Look at that ramp up in volume. In fact, 3 successive days, massive volume came in. That's actually a really good sign. In each of those days, the share price actually did rise. So that could be, I think, a fund manager, a broker take a position in this company. And the volume has actually continued to be elevated after those 3 big down days. So those 3 big volume days, not down days. This is a good chart. Nice chart, really good volume. Yeah, beautiful looking chart. Gentrack. Gentrack. Okay, so I've held this for 4 years. There's me buying Gentrack, $1.41. Big downtrend. Share price as high as like $7 back in 2018. Falling. I thought, ooh, it's been going sideways for a long time. I'm going to take a position at $1.41. And then on that day, the share price dropped after I bought to $1.31. I went, of course, I bought $1.41. Share price fell to $1.31. Share price did nothing for a year. So I bought on 21st of December 2020. Share price just went sideways for the next 6 months. There was a nice little rally. It went sideways. And then this, I still remember this. Look at this drop in share price over 6 trading days. Share price went from $1.90 all the way back down to $1.40. I still remember that going, what's happening here? Loose lips, someone knows something. And then they released something really positive on the 30th of September. Share price on that day rose 24%. So this is a case, and I know a lot of people say this, I would say amateurs, maybe not amateurs, but new investors say this. They see the share price dropping like that and go, oh, the company knows something or someone knows something, I have to get out. Bad news is just around the corner. This is proof that's not absolutely true. It could be just a fund manager selling, just putting the shares on the market every single day, and then the company released something really positive. And that just put the end of the downtrend. But lo and behold, the share price actually went down further during 2022, which sort of did make sense. Share price actually went to a low of $1.20 in September 2022. During this period, I maintained a holding. I was thinking, I think this company is pretty undervalued. Market just doesn't appreciate this company just yet. But for that 2 years, nothing happened with Gentrack, nothing at all. So there is an opportunity cost. And then all of a sudden, look what happened. Share price just went bonkers in early December 2000 or late November, early December 2022. Two really big up days. There was a definite breakout, and I'm pretty sure this correlated or corresponded with a good financial report from the company. And that was it. Since then, look at this chart. An absolutely brilliant chart. $1.41. A couple of times I thought, I should have taken some profits. I think I took profits once, but I still hold a pretty good holding in this company. But I do have my sellout price at $8.59. Share price kept on rallying to about $10.60, but we have seen the share price pull back to about $9. And this is the weakest Gentrack's chart has looked since 2022. So we're talking about a 2-year period. It's the weakest it's looked for 2 years. So I've been waiting to take profits in this, but I just thought I'm just going to wait until I get a signal. And at this point in time, it's very close to that signal. Now, I could have put this line or my sell price a little bit higher at that old lows back in August, but I just decided to give myself a little bit of a margin here. So that's my sell price. I'll put it at $8.50. So still a little bit off from $8.50, but if I continue to see a little bit of weakness in Gentrack, I will take profits. Judo. This is one where I took some profits and then bought back in. I have heard experts say, don't ever sell because if you sell, you'll never buy back in. Okay, that's more about their strategies and their psychology than anyone else, because I think it's very important to know thyself. And I know myself. If I sell a position and I make a mistake, I have no problem buying back in. And this is a case where I took some profits and then realized I made a mistake. And the reason I realized I made a mistake is because the share price broke out. So I saw the share price break out. I went, I'm going to take a position. So that's on the 20th of August. Results. Share price on that day rose 10.5%, bought $1.53. And of course, experts would say, well, you've missed the boat. Share price has increased 10%. Yeah, that's it. All the new information has been priced in. And I've already talked about this, but I've done research. When a company releases a positive announcement like this, there's a 6-month period where you're going to see share price re-rate 6 months. And the way I argue, it takes 6 months for information to be fully digested by the market. So that's why when a company releases a good financial result, even if the share price pops up like 10%, 20% on the day, there is a good chance the share price will keep on rising. Not always. Sometimes the opposite happens, but a lot of times you will see that. Now, when the share price doesn't keep on rising, I think the market is saying, well, this report was good, but we are worried about the future. And a lot of times, a good example of this, I'm going to show you. A good example of this, I think, is Jumbo Interactive. So this was on my buy lists when they released results in February. Share price popped up about 10%. Share price did initially keep on increasing, but then look at that weakness. So nothing really happened. And then they released results in August. And I think the market was a little bit skeptical about Jumbo Interactive's performance. Negative results, and the share price has now moved into a downward trend. So even though I did say I've done the research on this, and there is a 6-month, the period is 6 months. Doesn't mean it always happens. So you do have to be aware of that. It's not a 100% foolproof strategy. But anyway, go back to Judo Capital. Other people on Ausbiz, of course, say, no, stay away from this company. Just focus on the 4 big banks. No, this company is taking market share away from the big banks. That's why this chart looks absolutely brilliant. And also, the valuation of this company is not too high. I would say 15, 16. P ratio says 31, but that's, I think, so the profits the previous year was higher than this year. So if you look at the semi-annual numbers, last half year was 24 million. Previous to that was 45. So I think there might have been a one-off in the last half year. So I would actually increase their profits by a little bit to get the true P ratio. And the problem is a lot of experts and in other like private investors would look at that P ratio and go, this company is overvalued right now. P ratio of 31, that's ridiculous. But you have to look at why the profit did fall. There could have been a one-off. But The chart's speaking. The market does like this company right now. So I bought on good results, and yeah, the share price keeps on rising. And my sell price is just below where I bought. So I haven't actually lifted this. And in fact, I could lift it to about there. Yeah, I'm going to do that. I'm going to lift it to there. Just for now. Which means when I sell out of this, I'm going to take profits. NRW Holdings. This is one where I was late to the party. So the share price of this company moved into an uptrend probably back in middle of 2023. It's not a strong uptrend. You have seen on occasion a little bit of weakness. In fact, there is a bit of an uptrend here. I just noticed that. There is an uptrend here. It's a pretty nice uptrend. And the share price is well above that uptrend, by the way. Anyway, but the company did release a good report, half-year report. So I bought some shares the day after at 355. You can see there was a pretty big drop. Not sure what caused this drop. Bit of a pullback in September, and then it just recovered, and it just keeps on increasing. So this is a case where I do have my stop loss below. That's still below the price I bought. And I think this is one where I'm eventually going to have to raise it. And where I might raise it is there. In fact, I'm going to do it. Just like Judo, I'm going to raise it to there. Main reason I'm raising it to there, that's a support level. Because after this rise in share price, it found support there, broke through it, then rapidly rose back, and then we saw another pullback, and at about 350, there was a nice little support at that zone. So it's still a little bit below the price I bought, but this is what I do with my trades. I keep rising or raising my stop loss, and that way, eventually, if I keep holding a position, I'm going to take profits eventually. Not sure how long it's going to be. Could be 4 years from my initial position, like Gentrack. Maybe it's 10 years. And if I'm holding a position for 10 years, more than likely that's going to be a significant profit. And also less capital gains. Okay, so not every trade turns good. Here's one that I think might be turning bad. So Qube Holdings or Qube Holdings. This was one where I was like, oh, I don't know. It's expensive. This company is really expensive. And then I saw a nice little breakout. Not sure what happened there in May. It was a nice breakout. So I bought shares the following day at 352. Chart looks okay. Still, I wouldn't say it's horrible. We have seen a bit of a pullback. Share price has gone from $4 back to $3.65. But I do have my sell at $3.65. And share price right now is $3.68, $3.70. So this is a case where I'm close to taking a small profit, just a small profit with this one. And to be honest with you, I wouldn't be that disappointed. But I don't know. The share price actually could rally from here, but it's definitely looking weaker than it has for about 1 year. Redox. Okay, so this was one where, again, I had to remain patient. So bought some shares at $3.01. I did like the chart at that point. New IPO. They IPO'd. This company's been around for a long time, but they are newly listed. Share price did nothing. A bit of volatility in there. You can see the share price rise and fall by a fair bit in 1 day because I wouldn't say it's illiquidly traded, but not a lot of volume. And then I did have the top of a trading range, sort of around 330. We did see the share price get above that top of the range a couple of times and pull back fairly violently. In fact, twice. So I thought that's a very important level. So 330, and then it broke above 330 start of October, and it's just kept on going higher. So this is actually a nice looking chart. But this is also a case where I still have my stop loss at 301, actually just a bit below my price I bought. I'm almost willing to raise it or lift it to that level. In fact, I'm going to do it. I'm going to lift it that level. We'll see what happens. Okay, Southern Cross Electrical Engineering. I like this trade, but again, all trades eventually must come to an end. And this is starting to look a little bit weak. Now, my only hope here, we have seen a little bit of buying when the share price falls below $1.60, which is, interesting enough, my sell-out price, which was the lows the company saw back in August. So 2 days out of the past, in the past week, share price actually did drop below that level, and then we saw buying coming in. The reason I know there's buying coming in is because when the share price gets below that level, we see a rush of buyers coming in, and that forces share price back higher. And on Friday, share price closed at $1.62, so just above my sell price. Chart is starting to look a little bit weaker, but this could be a consolidation phase, fairly similar than IPD group, which I've held for a long time. I'm going to show you. No, I'm going to keep it to companies in this video. I've already pre-prepared. Anyway, so this could be a position I might sell over the next few weeks, which would be not. My profits will be pretty nice. So we're talking about 60% profit from when I bought in March, so just over 6 months ago. So you can't be disappointed with that. But I expected the share price of this company to keep on going higher. So what I would do is, if I do see the share price fall below $1.60 and remain below $1.60 for a little bit, I'm going to give it a bit of room. But then I see the share price going on another run. I'll buy back in. Admit my mistake, buy back in. Okay, so I took one position in the week. Well, I took more than one position, but one of the positions I took in the week was Praemium. Praemium, this has been bubbling for a while. So there was a really bad, this company released a really bad announcement on the 22nd of November, almost 1 year ago. Share price on that day fell 35%. And you notice they released that announcement, and the share price didn't drop much from there. That's actually a pretty good sign. So if you see the share price keep on dropping, the market is still wary about the company. If you don't see the share price dropping all that much, that's a good sign. The market doesn't expect much more negativity from the company. Now, the market can be wrong, but that's usually a good sign. So we started to see the share price just slowly go upwards from there, which is another good sign. Now, I didn't really get its buy signal up until July. There was a sort of a weak buy signal then, and then the company released something slightly negative, share price fell. Then the company released something positive on the 22nd of August, which is results. Share price on that day rose 25%. This did pique my attention at that point. What I should have done here is, when you did see the share price pull back, there was a pretty good pullback from about 54 cents all the way back down to 48 cents. That was a really good buy the dip situation. And look at what the share price has done since then. Nice little rally, and then the share price goes sideways. Exactly what you want to see. Rally, consolidation. Rally, and maybe another consolidation. So really what I should have done is buy on this dip or buy during this consolidation period. And then look when the share price rallied after this consolidation period. Look at the volume. Look at the volume ramp up. That's a good sign. Really good sign. Okay, so that's the one position I've taken in the week, a little bit late, in my opinion. If I actually had a look at this chart and judge my trade just based off the chart, a little bit late, I'll probably give it a C+. And to be honest with you, share price could drop significantly from here, which means my trade would be terrible. But the share price keeps on rising. Maybe the share price quadruples from here over the next few years. I'd give this trade A+. So it all depends what happens in the future. So don't fret if you think you're too late. Don't fret if you should have bought back in a little bit earlier. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.